Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. As you know, 1 Million by 1 Million is the first and only global virtual incubator accelerator in the world, headquartered in Silicon Valley, with the mission of building $1 trillion of global GDP and 10 million jobs by helping 1 million entrepreneurs reach $1 million and beyond in annual revenue. This is a very crazy mission, and it's entirely predicated on your success as entrepreneurs. We have no business being here unless you, as entrepreneurs, are successful. This is our 232nd roundtable. The roundtables actually predate the 1 Million by 1 Million program by a lot, because this is the experiment that led us to the 1M1M program. And the event is being recorded. You will have it available on the blog, on our YouTube channel, etc. If you're live tweeting the show, please use hashtag 1M1M. Our Twitter handles are at 1M by 1M. Mine is at Sramana. Please feel free to follow us. We maintain a high content channel. And our YouTube channel, where you will find all prior recordings, is 1M1M Roundtables. These are the teleconference call-in instructions. They will be relevant a little bit later in the session. To begin with, though, we are announcing the launch of my new book, Carnival in the Cloud, and this is part of the Entrepreneur Journey series. This is volume number 10, and it follows the exact same format as before, where we invite entrepreneurs to really simulate the experience of sitting down with you as entrepreneurs and having a cup of coffee so that you get to ask them questions. Well, in this case, I have sat down with them and I've asked them questions, and they have been very generous and detailed in sharing what they have done, especially with the early stages of their journeys. And you'll find all kinds of, all varieties, all flavors of entrepreneurs here. You'll find people who have raised lots of venture capital, people who have built billion-dollar businesses, people who have built bootstrap businesses, and the intent was to give you a flavor of the different types of cloud companies that we've been seeing, as well as the different different strategies using which people have built businesses. So I hope you have a chance to enjoy the book. And on the occasion of this launch, it's my great pleasure to invite a friend to host, a dear friend, Brian Jacobs from Emergence Capital, one of the firms in the cloud business that I respect the most in the whole industry. When the dot-com bubble had burst, there was, you cannot imagine, Silicon Valley seems like an incredibly arrogant place to you, right? Silicon Valley was actually afraid. And you could actually feel the fear in the air. Against that backdrop, Emergence Capital was founded by Brian and his two partners, Jason Green and Gordon Ritter. And it was a contrarian investment thesis. It was a completely contrarian bet on this whole service-oriented software, utility software business model, which came to be known as software as a service and various other variations, infrastructure as a service, data as a service, and so forth. And the whole field came to be known as cloud computing. But imagine an era when none of this existed, and these three guys were building or raising a fund to invest in this category. That takes vision, that takes guts, and I have tremendous respect for people who have vision and guts and do crazy things. So welcome, Brian.
Thank you, Sramana. You're very kind. I'm really happy to join you and your million by million group on this roundtable. I know you do great work and have helped probably millions of entrepreneurs by now, and I'm glad to take a part in it.
So Brian, let's start off actually with some of your overview of where you started investing in cloud computing, and of course a lot of water has flowed under the bridge. How do you see the evolution of the cloud computing investments, and then we'll get to the present landscape? How do you see the business changing, evolving?
Sure. So as you described, back in the bust in the years 2002 and 2003, we found ourselves in a very unique situation. The venture capital industry was paralyzed. Many of them had grown to be much too large for the markets that were available. Many of them had experimented with some crazy business models in the bubble and were trying to explain them to their investors why they tried such unproven investments. And we could see that there were some companies that were using the web technologies for business computing. And of course, Salesforce.com was one of the leaders and a company that we knew well, and we could see all of the advantages that came from this model. And we realized that this was the new architecture, that when technology goes through an architectural change, tremendous opportunities are created because it forces the incumbents to it makes it very hard for them to transition to a new architecture, and it's actually easier for a startup to build a business than for an established company which has a big installed base and lots of legacy practices that are hard to change with the new paradigm. So this was a fantastic opportunity. Our first investment was in Salesforce.com. We saw how well that worked, and we set off to find the next Salesforce.com. Unfortunately, what we found is that's a very unique company even today, and there's been very few companies that could really have as much success as Salesforce. But we were, our primary thought process was, let's look at the big categories of software and find a cloud company that is going to disrupt those big categories. And we did invest in companies like SuccessFactors in the human resources space. We invested in Intact in the financial services category, and a number of these large horizontal SaaS companies. And that proved to be quite successful for us. But as we know, there's only a few of these large horizontal categories. You know, everybody has a sales organization, everybody has a marketing organization, everyone has a finance organization, everyone has a human resources organization. But when you get beyond that, there's really not that many categories of large software where there's an ecosystem of competitors and the opportunity to disrupt them. As we learn more and more about how the cloud changes things, we have evolved our investment thesis, and we've found some new areas where the cloud really does provide a new opportunity. Rather than disrupting incumbents, we're taking advantage of the cloud to do things that we could never do before. So, for instance, the social wave in the consumer world, we knew that that was going to affect businesses. If all of the employees and all of the customers are on social networks, well, that's going to affect businesses that try to serve those consumers, as well as the companies who have those workers in their midst. So we've invested in a number of companies that are bringing social technologies to business. And we started to realize that the technology trends were being led by consumers, but they absolutely have effects on businesses. And we're always looking for how those technology trends, which become visible in the consumer world, can be applied to business computing. I would say another key theme for us today is around vertical software applications. So initially we thought, geez, those are probably too small, and that's not where the big software companies lie in the old architecture. But what we've learned through investing in these companies is that the cloud enables vertical software companies to grow much larger than they could have with a client-server architecture. So many of our investments in the recent couple of years are targeting industries like education, retail, healthcare, industries that actually haven't been strong adopters of technology in the past, but it's because they're, with the client-server architecture, they can't really connect doctors on a hospital floor to the IT system. But with mobile technologies and the cloud, you now can include all many workers in industries such as I mentioned in the IT system, and these workers are the people generally interfacing with customers, dealing with exceptions in the field. They actually have the information that is critical to running a business.
So, yes, the horizontal opportunity is starting to kind of look, okay, it's done, been there, done that. The vertical opportunities, also there are lots of vertical businesses already in play. Now, sitting in 2014, what is the future? What is the next game? The social, of course, the consumerization of the enterprise is a trend against which there has already been quite a bit of investment. You guys have made investments, other people have made investments. Where are you looking for deals now? And this is something that would be helpful for our audience, is that, you know, a lot of them are working on businesses. By the way, we have a company that I'm going to send you soon that is in the, you know, social cloud area. They're doing, you know, $1 million a year this year, $2 million run rate by the end of the year. So it falls in your sweet spot, which is a good segue into discussing what, you know, stage-wise, what are your thoughts, but also where do we go from here in terms of cloud investments?
Sure. So let me address the stage question first. So we're a venture fund that, while we're smaller than many of the other venture funds in Silicon Valley, we're currently investing out of a $250 million fund. We do write, our checks are typically in the $4 to $8 million range, and our style is not to spread our bets across many very young companies, but to find companies that have established product market fit and can genuinely take good advantage of, you know, $4 to $8 million, which typically means they have a product that they know the customer meets the customer needs, and they now need to scale up sales and marketing. That's where I think we can provide the most value to entrepreneurs, is our pattern recognition around building a robust go-to-market strategy, taking advantage of the latest techniques in telesales, in digital marketing, and also some of the specific and unique aspects of using channels to sell cloud services. Those are all things that we have experience with and, frankly, can consume millions of dollars to build. So we're not the kind of investor that invests in seed rounds with the hope that maybe something will emerge. We tend to make concentrated bets on companies that we think can become industry leaders. So as far as the future of the cloud, I think we continue to see more and more innovation. And I believe that innovation begets more innovation, that once you see how the cloud changes your business, you start to see new opportunities that maybe weren't so visible initially. I think that this idea around industry cloud, which is a vertical software company that is enabling competitors to aggregate data and actually share data without compromising their trade secrets, we're very excited about that opportunity. And so it's a kind of a mix of vertical software with big data. The idea that by sharing data in the cloud, you can do some things that companies with a on-premise solution just can't do. So that's one of our key investment themes. Another one is something I mentioned earlier, mobile business applications. We think that the mobile phone is now effectively a supercomputer in your pocket, and there's no reason why every worker in your company can't be connected and using the information from the company and also contributing information into the knowledge of the company. So we think that there is lots of innovation in the mobile space, but more companies are being funded in the consumer realm than in the business realm. And we know from experience that there's a major opportunity for businesses to take advantage of these technologies as well.
So we did, all of September we had events around the launch of the e-commerce book that I just published, From E-commerce to Web 3.0. And e-commerce is very hot right now. And so is cloud very hot. And in both of those cases, I think there's one question that is coming up is that, when an industry gets to this mature stage, which both e-commerce and cloud are in a more mature stage now, not that disruption opportunity kind of situation, we see a lot of small businesses, something that is not going to be venture scale, but you can build a $5 million cloud business or $10 million cloud business, and we are seeing it all over the place. And some of it is slower growth, because in the international markets, for example, we have a big India practice, and the Indian SME market, even Indian enterprise market actually, is a very slow technology adopter market. However, there are lots of cloud companies that are now catering to the needs of these Indian SMEs, and there are lots of them. It's a big country. However, for these companies to become venture scale and be growing at a venture pace is something that is not clear quite yet, And this is true about a lot of the international markets. If you look at a Latin American situation, it's very similar. If you look at Africa, it's very similar. India, in fact, is more mature than some of those. China is more mature. But then there are a lot less mature markets like the Latin American, African, Indonesian situations. Very big markets, but there are lots of cloud business opportunities all over the place. Whether they're venture scale or not is a question that it has to be evaluated. And then the other trend that we are seeing is some of those companies that have been built somewhere else, including Europe, by the way, are moving to Silicon Valley or moving to the US and taking a global spin on whatever they have built. They've built good technology, they've built good customer bases, and then to go global and take on the US customer base and become full-fledged larger software companies, they are moving to the US. Is this something you are seeing in your practice?
Yes, absolutely. Can you hear me okay?
Yeah.
Okay. Yeah, we believe that it's possible now to grow a business really from anywhere in the world to become a global leader. But the most common technique is to, I believe that the U.S. is well ahead of these other markets in adopting the cloud, and that what we've seen is the companies that emerge as the U.S. leader are then in very high demand in international markets. Because the cloud levels the playing field, and in most cases these cloud applications can be accessed from anywhere on the planet, that companies naturally gravitate towards the market leader. And if hundreds of thousands of businesses in the U.S. have embraced a particular solution, most international business people realize that's probably the best solution. And in some cases, local markets, the markets will be fragmented depending on the country. So for instance, the financial applications don't translate as well across borders as some of these other solutions, even though the financial standards are merging to the point where that's going to become a single global market at some point. But in general, we tell our companies, win the U.S. market. Put all of your energy into winning the U.S. market, and the rest of the world will come knocking at your door once you've achieved market leadership. And so entrepreneurs from other regions have absolutely come knocking at our door, and we've worked with them to, in some cases, transplant the company into Silicon Valley, and in other cases, maintain their engineers in the local environment, which often have fantastic domain experience and a much better cost structure, but build their sales and marketing infrastructure in Silicon Valley, where we have the talent that is experienced with hypergrowth and with capturing the U.S. market. And so that's absolutely a trend that we see, and one that we're trying to encourage as well.
And at what stage do you recommend people to make that shift in your orbit? So if are we talking, get to $1 million and then move to Silicon Valley, or are we talking get to $5 million and move to Silicon Valley? I mean, we see all kinds of permutations and combinations of this behavior, but I'm just curious what your thoughts are on this.
I tend to think more in terms, rather than a revenue number, more in terms of product market fit. If you've got a product that is clearly meeting the needs of your customers, and you believe that it's time to really put your foot on the gas and grow your sales and marketing capabilities, then that's a good time to do it. And we see some companies which, for instance, are offering their product on a freemium basis. So they are getting no revenue from those customers, but you can start to see if the product is meeting the customer's needs, and that's more important to us than a specific revenue number.
But if you are going for freemium business, for the freemium business model, there are two issues with that, and we deal with that in our activities all the time. One is it's very difficult to bootstrap freemium businesses, right? You don't have investors and you don't have customer cash. How the hell do you get these companies off the ground? Unless you have, money, you have had previous exits or successes, whatever, but somehow or the other, the bootstrapping stage then has to be managed.
Yeah, I think that's true. A key part of a freemium business is not just the free part, but the premium part. And the really hard part about those businesses is getting the right dynamics to have a viral spread of the free product, while also figuring out those levers which create conversion to premium. And I admit, if a company with a free product comes to us and they have no paid users, I'm not sure I would call that product market fit. But I do believe that you don't need a lot of premium users to prove the value proposition, and particularly you can have mass adoption of the freemium products that demonstrate that product market fit that is so critical to justify additional investment.
Yeah. Now, question about a slightly different business model that we have seen, and you have invested in companies in this business model actually. Let's use the example of Athena Health. This is a very large public company. It's a software as a service company, but it's not just software as a service. They actually do outsource the entire business process of collections on behalf of physicians' offices to collect money from the insurance companies. And it's a very, very successful company. It's really hot as a public company as well. This model of not just software, but what I call software-enabled business process outsourcing. How much of this are you seeing out there?
I like your name better than the one we use. We use the term technology-enabled business process outsourcer, which is kind of a mouthful. But we absolutely see that trend. I think in some ways, purchasing a software as service application is a way of outsourcing the management of that application. And so you don't need to have world-class IT. You don't need to have the infrastructure. You can let someone else manage that. And in fact, you can let the company who does it best, the creator of that software, manage your application for you. And so it is a form of outsourcing. It's outsourcing just the IT portion of managing the application. But I think there is an opportunity to outsource even more than that, and I think Athena Health is a great example of this concept. It's a software-driven company, but what they're delivering is not software. They're delivering the output of a business process, and that can be that is typically a much larger opportunity than just selling the software. But it's a harder business to manage. There's people involved. It's a
operationally.
Yeah, operationally intensive. I think that's exactly the word I was searching for. So we think that in some cases the market will want just the SaaS piece of it, and we have lots of examples of that. But in other cases, the market doesn't want to outsource the IT portion of it. That's not enough value versus outsourcing the entire business process. I mean, we always look at ADP as one of the original companies of this category. They are driven by software, but the end product is a paycheck, and there's a lot of additional work that goes into creating that end product.
Yeah, the other thing that I've seen in my career in various instances is that people get software and they don't know how to use it, or they don't really have the staff who can really take advantage of the capabilities of the software. So you kind of deliver a Ferrari, they're driving like a Toyota, and it's, you know, they don't really take advantage of the capabilities of the technology. So, you know, in a lot of those cases, actually, this model, the SaaS-enabled BPO, let's call it, model, is often can deliver a lot more value because the people who are driving the software are driving it like the car was designed to be driven.
Yeah, I think that's a great point. Though I would say that the shelfware phenomenon is going away in the cloud world, because most SaaS, you can stop the subscription if you're not getting value or your employees are not using it, and the SaaS companies today are all very attuned to the understanding that if their customers are not getting value, they will leave, and so every company we know has this customer success function now, which is all around making sure that the customer really is using the product and not just, you know, they didn't buy it by mistake. But I think your main point is an excellent one, that with this SaaS-enabled BPO model, there's some shortcuts you can take. First of all, you don't need to support the software in remote environments, so you can control how it's being used, who's using it, and you can design in features that probably wouldn't survive in the open market, but can be shortcuts for your own employees to deliver the service. And I think that's a great leverage point in that business model.
And I think that becomes kind of interesting when, you know, you look at some of these new industries that have developed and scaled, right? There are probably 1 million e-commerce merchants, small merchants that, you know, run shops on a Shopify or a BigCommerce or one of these e-commerce platforms, and they have a set of specific needs, and they are small businesses, so it's difficult for these small businesses to run all those different business processes internally. To be able to outsource some of these processes to, you know, these SaaS-enabled BPO shops would be, this is just an example of a segment, but this is true about a lot of different segments, that, you know, having to hire capable people who can perform that function versus outsourcing it to an expert, not just software, but also the execution of the software, is very useful.
Yeah, we're starting to see, you know, the modularization of businesses where a entrepreneur in almost any country can build a fairly scalable business all by himself or herself, merely by choosing the components of the business that they need and writing a few lines of code to stitch them together. And before you know it, they can be serving web pages, shipping product, collecting across borders, paying their taxes. All these things are available as a service, and that's a tremendous capability. That's, again, it's an example of the cloud really changing everything and how you start a business, and that begets more innovation. That's very exciting to us.
Yes, and this whole zero logistics e-commerce companies trend has entirely been built on top of the cloud services, modular cloud services that have been plugged into, somebody is doing the fulfillment, it's just incredible how category-leading companies, sizable multi-million-dollar category-leading companies are built on these very ultralight organization structures.
Yeah, we don't see an end to the innovation anytime soon. I think there's lots of nooks and crannies that could benefit from the cloud architecture, and I think the international opportunity is massive. I think the idea of giving workers mobile devices, or actually typically they bring their own mobile devices, you just have to give them a link to the application, that all of these things lower the cost of computing, which just makes it more and more available to smaller and smaller companies. And I would also mention we are seeing now companies that are targeting Salesforce.com, the granddaddy of all cloud companies, with the next generation of SaaS offerings. So even the big companies that have taken advantage of the first wave of the cloud, they're not safe from this innovation. They will have to struggle with companies that have more lean business models, better technology, integration of things like social and mobile from the get-go. These things are true innovations that will keep driving the industry forward.
Super. Brian, I know you have to be at a board meeting soon, so thank you for being with us, and I look forward to talking to you later.
Sounds good, Sramana. Thank you so much for having me. I regret that I can't stay and listen to the pitches that are coming up. Unfortunately, I do have a board meeting I need to get to, but I really enjoyed our conversation.
Bye-bye. Take care.
Thank you.
Okay, folks, we're going to go to Jainil Aga next. Square, is that how you say it? Wow.
That's right.
All right.
Hey, Sramana, am I audible? Am I audible and clear?
Yep, go ahead.
Hey. So, thanks a lot for having me here. I think it was an excellent session. It was very informative. So, I'm calling in from Mumbai. The concept is OOH Square. Actually, it's an acronym for out of the house. It's a very common term used in the advertising agency. So OOH Media stands for any media which advertisers or agencies could use to basically put up their ad campaigns, anything which is out of the house. So for example, it could be billboards, it could be street furniture, it could be transit vehicles like taxis or autos, it could be on the trains, it could be anything. So that's all about the name. So just as a quick introduction, I have been on the buy side. I just quit my job actually 2 days ago. I was with Daring Private Equity Asia, of course, doing very different kind of investing, sort of $200 million plus kind of ticket sizes. And before that, I was a consultant at the Parthenon Group and a master's at Duke. I was recently got in touch with my other two co-founders who are actually Anup, who's actually the brain behind this particular concept. Unfortunately, he couldn't be here to do this pitch. He's an advertising industry veteran and the brain behind this thought. So let me quickly go to the business proposition. We are basically a cloud-based application where we want to facilitate real-time booking of outdoor media inventory. So if we go on to the next slide, I think it will help better understand, the pain point which actually exists today. The pain point is dual.
Can I give you feedback before you carry on?
Sure.
When you do these kinds of pitches, don't put so much text on the screen. It's really hard for people to follow along. I prefer putting as little text as possible on one slide, so I kind of make one point on one slide. And that may require a few more slides, but it's just not very productive because no one can read. In the time that we have, no one can read this much text. So you just have to make the point and synthesize it, and you have to get better at doing that, because this is going to be, I'm just one of your pitches. You're going to be pitching to a lot of people, customers, you're going to be pitching to investors, potentially other, possible employees and so forth. So you need to get efficient.
Absolutely. Makes a lot of sense. Makes a lot of time. Thanks for that. I'll do that in the subsequent pitches for sure. So just going back to the point on who will be our customers, and what is the pain point that we are serving. We're going to have two sets of customers. One is guys who we call owners/vendors of these media inventory. Anybody who owns those billboards or transit street furniture. And the other customer is going to be the advertising agency. So I'm going to quickly walk you through each of these segments and tell you what is the pain point at the moment. From the vendors of the media, at the point, this is a business very focused on the Indian ad agency. So one of the pain points in the Indian advertising agency is that it's still extremely unorganized, right? You still don't have a one-stop shop to know where do these vendors, how you can book and how you can actually utilize the media inventory at different parts of the country, and which is geographically extremely diverse. So, you're usually dependent on several layers of intermediaries to actually run a national level ad campaign. Mm-hmm. So what our product will actually do is it will ensure that, we basically there's a level playing field for everybody, the small vendors to the guys who are holding, who probably have, controlling 25 billboards in a city like Mumbai. Because everybody will now, have access to showcase their inventory on a common portal. That's one point. This obviously also increases utilization and, occupancy of the inventory, and obviously gives them better price discovery, because at this point they are completely dependent only on the intermediaries and, probably take any price that, the intermediaries kind of, give them. Yeah. On the advertising agency front, the pain point at the moment is of, specifically on multiple and duplicate booking. What I mean by that is, let me walk you through a typical process. Like I'm the national designer of an ad campaign. I decide that I want to launch a premium campaign for a premium product, and I kind of send in a request to all my vendors. The vendors actually come back with a multitude Excel sheets, and they give me only options. These are not necessarily options which are available. These are not options in real time, because by the time I collate that information and I shortlist of bits of inventory, the vendor has already given it out to somebody else. So it goes through, you go through multiple bookings and duplicate bookings, because the vendor has given the same bunch of, options to several of their ad agencies. And secondly, it is a lot of inefficient way of going back and forth on the booking. So what this particular product is envisaged to do is to, you can sit in your own corner office and actually have an entire, map of every inventory possible.
Very good idea. I like it. It's a very good idea. And there's nobody who's doing this yet?
There is nobody who's doing it. There are two guys who are doing this called Media Ant, but I think they are actually going onto a suicidal path, because they are trying to replicate and becoming an ad agency on their own. We want to go to bed with the ad agencies and help them grow their business and, make it easy. They're actually trying to become an ad agency, which I don't think is the best place when you have deep pockets like WPP and Bennett Coleman and, all the big shots of the world. They're not going anywhere. So those guys are trying to enable.
What is driving that decision on their part? Is it because they're not making enough money out of this core business that you're proposing to do? Is it something that they tried and that didn't monetize very well? Have you checked?
Yes, I don't think, that's a good question, and I think that is through, our industry contacts. I need to definitely check if they actually tried doing this, but I do know that they haven't, they really haven't, they've not been here for too long either. I mean, this is something which has also come up just in the last 1 year or so. So, but we will definitely check it, if whether or not this is, this has been tried and failed for whatever reason. But, we are doing this independently as well. If you go on to the next slide, Okay, so let me just walk through what we think is also the broader vision where this can actually go. We take, because of Anup and even me as my experience in consulting, we've realized the power of, data aggregators. I think a point which is also mentioned in your pitch right now. Over time, this network and, when you sit on information, it becomes extremely powerful and different avenues of monetization come up. And just the way AC Nielsen has become sort of the voice for the FMCG and consumer sector in India, where no consumer company can depend without it, we feel that if we can get enough traction and if we can get enough people on board, we could become the AC Nielsen of the ad agency. So what do I mean by that? We can start talking, throwing out analytics around seasonality and pricing trends. We can actually collate and, go to an investor who's invested recently in a company called Craftline, which actually talks about, real-time traffic updates and basically link our, pricing of our, billboards based on, the density of traffic at a particular point. We can actually end up doing vendor ratings and selection, based on, which kind of geography or micro market is actually seeing better traction and, having better feedback. We can actually do real-time reporting, which means that if I'm a brand manager at Hindustan Unilever, and I go from, say maybe from Burley to Bandra, I actually get an SMS on my app saying, hey, by the way, this is, one of your campaigns is running on the right side. So these are the kind of things which we really think is going to get, users really engaged on the agency side. And we're going to do a subscription-based revenue. Of course, to your point, and I really love that and appreciate your point that, there is no point chasing a business which does not make money. So this is not going to be a free model at all. We want to make it a subscription-based revenue model. And we do believe that an ad agency will give us, that fee if we show them enough value. On the vendor side, again, I've listed down those points. They have, fairly self-explanatory. I know I have little time. So, we're going to charge a very nominal amount. The strategy is so that we can get more on board and let the network speak for itself and actually charge the agency, which actually sits on the deeper pockets and actually has the client budget to spend on every incremental campaign. If you go on to the next slide. This was a point on how we could go on getting our customers and how we would acquire them. I think the number one big bang event is going to be the annual outdoor convention, the trade fair, which happens in Mumbai, where we have almost 2,000 to 3,000 vendors who come in on over 3 days. I think that is when we are going to get probably get a little bit of a big bang event and kind of market our product there. And then we've also got raising the next round of kind of getting an angel round on board to kind of create a sales force and have a success-based payment where, we can empanel more and more vendors. We want to apply a two-pronged strategy where we use our ad agency connections, give them a free model for the initial phase, and encourage and kind of request them to encourage PR vendors to actually come on board. So the idea is that if we can get at least 2 or 3 big ad agencies along with their vendors, we can start selling that case study and then start, multiplying and replicating that effort to get a lot more people on board. The next slide, please. In terms of customer validation, we understand that it's extremely important. We've got some customer validation done through sort of primary research and our experience of one of our co-founders for 15 years in the industry. But, we understand that's not enough for investors, and we are, as we speak, running a N equals to 100 survey, 50 from the vendor side and 50 from the ad agency side with very specific questions, which A, drills down on the pain points, and B, gets a little sense of what is the kind of, money that the ad agencies would be willing to pay for a product of this sort. So I understand we're a little premature for making a pitch, but I thought at this point getting your feedback would be extremely valuable if we are on the right track. And the next, sorry.
I think you are on the right track. I think it sounds like it's a real problem. I can completely see that the process is very manual and very cumbersome basically. And any process, any business process out there that is messy, cumbersome, and however, something that needs to be done to execute a certain type of business, any automation has always been desirable in those. And right now, because of these very fluid, flexible architectures, especially the cloud architecture, it is allowing people to get in and solve these problems and automate these business processes very extensively. So the question really is going to be, if you have a real problem that you're solving, the question is going to be how big a market, what is the business model, what is the pricing model, what is the bottom-up TAM analysis. These are the questions that you need to answer next.
I agree. So, I mean, I have those numbers. I have not validated that, but the industry is approximately $6 billion is the overall ad industry, ad spend, out of which outdoor media itself is at least 10%. The good thing about outdoor media is that, as you know, it's going to evolve. It's not going away. It has no substitute, because if you see the West, outdoor media, billboards still exist. The difference is that, you know, from having a paper-based, poster-based, it will probably become digital-based. But it's not going away anywhere. So that industry is robust in terms of.
Even in the West, it's not really digital. There's a lot of paper-based billboards. So, but that
right.
Also come is that billboards become digital. That is something that is going to come over time.
Absolutely. Which will only increase. It should make this thing only that much better. But I think, I think the problem what I'm trying to wrap my head around is two-pronged, which is on the slide on challenges, is, how should we think about the initial empanelment? I think you touched upon that point that when you are early on trying to create scale, you have to burn some cash. But at the same time, for this business to achieve scale, you need to get a stronger network. So how should we go about empaneling, the vendors as well as the ad agencies at the same point? Is what I'm thinking, is that the right way to do sort of a mix of big bang marketing at the right avenues, at the same time give them a free model to test it out and be comfortable?
On this is not big bang marketing. You're going to have to go sell your concept and get your customers on board. No big bang marketing is going to make this happen. But I suspect, and you're going to need to validate that through your actual conversations with the customers, the target customer base, and the vendor base. I think you are solving a real problem, and typically when you solve a real problem that customers want solved, they will work with you. And to the extent that if it's really a serious problem and they really want to solve you, they may actually give you some advance cash.
That's right. That's
you have to have. And see if you can customer finance it, and then if you're absolutely right in observing that VC is not going to come in until you get this validated and rolling, it really depends on what you have to keep your cash burn really low. So the question is, how much cash are you looking for, and whatever is the gap that you have to sustain. You have to do that yourselves, basically. You have to do friends and family. You have to, or ideally you want to do it with customer cash, but if you absolutely cannot, then it's friends and family.
Understood. Okay, that's great, Shamana. I think I'm happy if you have any more observations, recommendations for me. In interest of time, I'd like to keep it there.
Okay, good. Well, keep going, and let's move to Dhiman Bhattacharjee in Fremont, California. Dhiman, please unmute your line and tell us what you're working on.
Thank you. Thank you, Samana. Am I audible?
Yes, you can. We can hear you.
Okay. All right. Okay, so today I'm representing my company, the startup called Iblink. And with Iblink, what we are trying to do is we are trying to change the conference experience that people go through when they attend live conferences. As part of my background, my day job is at Oracle. I am running the product strategy for 2 of their data management products in the master data management space. I am also an MBA student at Berkeley Haas, doing part-time MBA. And before that, in my educational background, I have a Master of Science from MIT.
Okay.
So with that, what we are trying to do is, I'll explain the problem, and then maybe you can tell whether it resonates with you or not. So today, when we go to a conference where there is slideshow presentations going on, and I'm sitting in the audience, and I see the presenter presenting a slide, and I like the content in that slide, and I want to capture that content. What do I have to do? I take out my phone, and then I take a picture. And then after that, after some time, another slide resonates with me, and I take another picture. And at the end of the presentation, and imagine at the end of the conference, I might have taken quite a few pictures. And then now, after going back from the conference, it's really hard for me to understand at what point did I take that picture, and how do I want to relate it to what the speaker has said.
Mm-hmm.
So now if you use Iblink, when the presenter is presenting his or her slide from the podium, the same slide is also showing up via Iblink in your iPhone or iPad.
Mm-hmm.
If you want to bookmark it, you just bookmark it. If the facility is there, you bookmark it. You want to annotate the slide, you can just annotate it right there. And let's say,
Viman, what does that entail in terms of the back end? So to have every presenter slide on your system, are you talking, is your app then talking to the projector? Is your app talking to a console computer? How is the slide getting to the app?
Yeah, so that was what I was going to talk about in the use case. Yes, exactly. So before the presenter presents, the slides have to be updated into our cloud server. So they usually, when the people goes to a conference, they upload the slide deck beforehand, right? And that slide deck needs to be synced with our server. So all the slides are there. And then when the user is presenting through the PowerPoint, we have a very lightweight plugin in the PowerPoint, which kind of sends the signal which slide is the user showing at that point. And that signal goes to our cloud server. The cloud server then sends it back to your iPhone so that when you hit the button that says, take me to the current slide, which I will show you in the plan, it kind of it shows you that particular slide which the user is presenting at that point.
Your assumption is that all the presenters send in slides in advance so that the server can do the distribution into the apps. And how, in terms of the logistics of this, I'm sure, from doing conferences that people do this stuff at the last minute. So is there a counterpart to this as far as the presenters are concerned to upload their slides into the server right before they're about to go live?
The idea that we are basing it on is that we would be syncing with the conference organizers, because conference organizers take the slides, right? I mean, the idea is even if you upload the slide to 5 minutes before the presentation starts, we can still do that. As long as we know that which all presentations are going to happen and the slides come in right before the presentation starts, we could do that. But I understand what you are talking about, that there is a friction that's coming in. Like, let's say the presenter comes in at the last moment with a dump drive and just plugs it into the computer and starts the presentation. How am I going to sync it to my system, and how am I going to project it in the user's mobile device?
By the way, for event organizers, that is the huge kind of logistical complexity that every event organizer has to go through, is that slides coming in at the last minute and juggling all this stuff. Somebody has sent in one version of the slides last night, and then this morning at 7 a.m. they sent in another version of the slide, and at 9 a.m. they go live, and then at 8:30 they come out. I've made some more changes. Can I just plug in my thumb drive, etc.
Right. Yeah, exactly. That is a friction point that we would have to test out how it works. So in terms of one market, I guess there's a conference market. There's a typo. There's $240 million market worldwide based on the calculations that I did. We have a different market which we think is much more much more broader, and it would be much less friction, is the business market. However, the first market in the conference market is the one where we have had some success. I have been able to sell it to the group that's doing a summit in Oracle. in San Jose in January. So Iblink would be used there. There would be around 3,000 attendees, and it would be a point to see what are the customer pain points that we are observing, how it is working, what kind of requirements are coming out of that. So that would be a test bed for the first test bed for this software. The reason we went to conference is that there's direct applicability of it in the conference right away. The business market is there. It is the same concept where we have a lot of slides, whether it's a sales deck, whether it's marketing decks that are used within enterprises. And the biggest complaint is that the slides and the decks are there, they're not getting updated. And even if they're getting updated, when we download, it's not necessarily the latest version that we are downloading. So using the Iblink in the back end, the user will always be ensured that they are downloading the latest content. And even if it is not the latest content, after you have downloaded through Iblink plugin, we can push the latest content to you, provided you use the slide deck. And then once the user downloads the slide deck and uses certain slides of that deck, we can track which presentations that those slides are getting used in, so that it creates a trail of slide decks to show that, okay, if I have created a content, how far is it gone and where it has been consumed.
And how much
Oracle
is validated right now? Besides this Oracle event, have you talked to other conference organizers who are willing to try this and who have given you a perspective on whether they want to do it or not?
Yeah. In the previous slide, I mean, we have another conference called SEMI. It's a conference of electronic users. The semiconductor manufacturer that happens. They have a conference in March in Boston, which is of a lower scale. It's like 300 people. So we are talking with them to see if they could be another pilot for this project. We got another one from an independent conference organizer in Los Angeles called CROI. They do medical conferences, but then they are an organizer which does like conference after conference. They're the organizers. They do one every month. So they have also expressed interest in using this service.
And what is the business model here?
The business model here is conference organizers. For the conference market, I'm talking specifically about conference organizer uses this software. They are the ones who pays us the license, and then it is per user base. So let's say I am buying this service from Iblink. I'm a conference organizer. I'm buying this service for, let's take a number, 100 users. So they will be charged per user per day license fee. That's how we are talking.
A number on that?
I'm sorry?
You have a number in mind?
On the license price?
Yeah.
Yeah, we are at this point when we talk to CROI, the number we put is like $2 per user per day.
I see. Okay. All right.
So this is where this is something which I'm using one of my presentations here, the one that I demonstrated to Oracle, where when you go to a conference and then let's say in the audience you are sitting there, and then you open up the Iblink, you can see in the first phone is all the live conferences that are happening at this point. You click on the one that you want to follow. Let's say you are clicking on the second one. So there your screen refreshes on the iPhone, which shows the presentation. And as the presenter goes through his or her slides, you have to press this green button on the bottom to refresh it to that slide. And the reason we do it is because we don't want to clog the bandwidth by pushing the slide content to everybody. It's more of a pull mechanism so that it consumes less bandwidth. If you want to see the updated slide, you click on this computer icon on that. I already talked about that if you like a slide, you can bookmark this slide. You can add or annotate notes in here. And there's another good feature, which is you can share a slide. For example, what I have seen is that in conferences, it's not like an organization can send everybody in a conference. It's like one or two key persons sent to the conference. But then there's a whole team sitting in the office. So let's say you want to share what you have just learned in the conference in real time with the team. So you can share that particular slide, provided the presenter has given permission to make it public. And then right there could be a collaboration. Someone sitting in the office can ask a question. Hey, I see what you are showing here. I have this question. Can the presenter answer that question? So after the session, when the presenter logs in, they can go and answer the question. So in a way, we are creating a social environment around slides. Okay.
Okay.
So yeah, go ahead. Was there a question?
What I think we get what you're trying to do. What questions do you have? What do you specifically want to focus on?
So one would be, while we are trying to do the product to market fit, since you have this experience on going from businesses, you also have this experience of looking at a lot of business models. Is there any specific feedback you would give us, or give me specifically?
And then model, I don't see a problem. I don't think you should give anything for free. I think you should charge people. And you know, you have a see, the thing about the business model that you've chosen and the market segment that you're trying to go after, you cannot really go visit these people to sell deals because they are too small, right? The deal sizes are too small. So you have to do everything by phone. So even if it's a 3,000 people conference over a 3-day period, that's still just an $18,000 deal, one-off.
Right.
So you're gonna, you know, so you're gonna have to. There are, in certain cases, you will find that there are conference organizers who are doing one after another, in which case you build relationships with them and so forth. That's fine. The thing that I would like to see is, you know, what are we talking about in terms of bottom-up TAM number? Because it's not clear to me. What is the size of the business opportunity here? That's something that you should pay attention to and figure out. Can we get to the slide number 2? But I talked about there's a $240 million conference marketing. That's what we are thinking. And the way I calculated the TAM was looking at average conference sizes and how many people attend. And if we are charging everybody out there to be using this conference and then discounting it by half of it, how much is the TAM coming out to be? So I get to your point that the TAM is probably for the conference market, not a big one, but that's as I said, that's an easy entry that we see into that market. The real money would come if we could put it in the enterprise and make it an enterprise sales, like a relationship sales thing. And as you said, like value proposition is the same, right? In an enterprise, sharing slides is no problem at all. You put it on the intranet and everybody gets it. This is a very easy thing to do. Your value proposition does not work as well in the enterprise.
Yes, we have to refine more. The idea is that it's putting on the internet, but the idea is that it doesn't get updated. You put on the internet when you go to look for slides, and that's the problem that we always get to, because as product strategy, the sales guys call us and tell that, is this the latest version? If not, can you email me the latest version? They go to a presentation and then they show slides which are like a couple of years old. And then we go and tell that, by the way, the things that you have shown, we have gone through 5 different releases after that. So
that's a different problem that you're trying to solve. That's a different problem, different sales process, different, you know, different way of going to market. These are 2 very different businesses. And the other business that you're talking about is going to have competition. I don't know if this one has a lot of competition. The other one definitely has competition.
Yes, ClearSlide is definitely one of them when we see as a bigger competitor, and they have taken a lot of market share, and the sales guys just love them.
And ClearSlide is a big company. ClearSlide is not a small company, right?
And ClearSlide is a big company and raised a lot of money so far. That's true. So that's where I have it, and honestly, this is my
one thing I would ask you to consider, Dhiman, is there something, without going to compete with ClearSlide on the business market, if you are going to, if the conference market looks more open and more receptive, and if you found a gap there, and if this is a market that you can actually get into, can you create a product roadmap that sells more stuff into that market. And I don't know what that more stuff is. That's why I'm just saying it's a placeholder as far as more stuff is concerned. But as you explore, as you discuss with these conference organizers, are there other things that they're trying to do to increase and enhance the experience of a conference goer and the conference organizer that gives you more of a, let's say maybe 3 or 4 different products that add up to $1 billion market opportunity? Is that possible? I'm just giving you another way of looking at things. Because the business market I'm not convinced about that you can compete in at this stage.
Got it, got it. This is good feedback, okay.
Okay, and unless you can create a product roadmap that sets you up as a venture scale business, you cannot raise money except from friends and family.
Right.
So seed funding is a feeder into the venture funding system. So people who are trying to look at seed funding opportunities are looking at it the same way as VCs are looking at it. They're just investing in earlier stage companies.
Yes.
So all these things that you have here, right now, based on what you've presented here, you're not ready to raise a seed round.
Okay.
Okay?
Okay.
So that's my feedback for now.
Sounds good. Would you be interested to be in touch and so that I can update you what happens later on and how we progress? And
so if you hang on, I will tell you exactly how we work with people. Not only am I interested in being updated, I would actually be very interested in helping you do what you're trying to do, but you have to work within the framework of our process. And if you choose not to work within that framework, then the answer is no. So if you work within our process, I'm very happy to work with you and help you. But if you're not comfortable with our process, there's nothing I can do to help you. Okay?
Sounds good. Sounds good. Okay. Thank you.
So folks, a quick request is if you like what we are doing here, please refer 1 million by 1 million to serious entrepreneurs. We are looking for people who are serious about building businesses, because building a business is not like a 6-month process. It's going to take many years of your life to build a business, and it's those kinds of entrepreneurs that we are looking to work with who have the resilience and the commitment to go through a multi-year process of business building. And here's how we work with the entrepreneurs. So everything is on 1millionby1million.com, 1m-by-1m.com. In terms of resources, we have a very active blog. It's very content rich, and a lot of people learn a lot just by following the blog. We get emails all the time about it. We also have the Entrepreneur Journeys book series, of which we have published 10 volumes so far, each with a specific focus, and the format in all cases is somewhere between 12 to 15, 16 case studies, and then commentary around that on that particular topic. And it is really the whole Entrepreneur Journey series is a simulation of this experience of sitting down with an entrepreneur who has been successful and has a level of sophistication at their disposal so that you can learn from them. So I have sat down with each of them and extracted their methodology, their stories, their strategies, so that you all over the world can access this body of work and learn. So this is the first attempt at institutionalizing the tribal knowledge that has been out there in the heads and experiences of successful entrepreneurs, not just in Silicon Valley, all over the world. People who have succeeded have made certain choices, and this is really the only effort that has happened to really capture this at scale. So we have had over 600 entrepreneurs participate in this process, and it spans from bootstrapped entrepreneurs, venture scale entrepreneurs, people who have built billion-dollar businesses, all throughout this Entrepreneur Journey series. And we follow the same principle in the 1 million by 1 million curriculum. Again, we have these 600 plus entrepreneurs who have participated in building the curriculum that we use to teach the program. This is what the site looks like. There are lots of FAQ videos which will help answer your questions. These roundtables happen every Thursday. This is our 232nd roundtable. We've had thousands and thousands of people participate. If you would like a slot to pitch or just attend, please go to the free public roundtable page and reserve your slot. The premium membership is a $1,000 annual membership fee for extensive methodology guidance, the curriculum that I just mentioned that is delivered in video lectures and case studies. We do a lot of business development work. We have a deep Rolodex which we make available to our customers, to our entrepreneurs, and that includes potential access to customers, channel partners, and we also help you with financing. We have an extensive set of relationships in the financing world, and if you want to finance your company, we will help you prepare for a financing round, and we will make those relationships available to you if you would like to raise money through our relationships. That's definitely part of the program. We have a version of these roundtables that are available for just premium members. These are closed door sessions. That's our strategy consulting, mentoring, coaching, whatever you call it. We also help you with media. It's very difficult for entrepreneurs to get coverage unless you have a big financing announcement to make. So that's where we come in and use our clout in the media to get you coverage. The $1 Million Club is a set of case studies of successful 1M1M entrepreneurs. We have an ROI analysis of the 1M1M program, $375,000 plus 5 to 10% equity worth of value for just $1,000. We have orientation material, how to use 1M1M effectively. The self-assessment is something that we recommend you take a look at. It's on the website. These are questions that you should be asking yourselves. Investors will definitely be asking you these questions. You should ask yourselves as well. There's a lot of information about the premium program, what to expect from it, a lot of video FAQs. The curriculum, as I said, is case studies and video lectures. We have 7 core modules: bootstrapping, positioning, market sizing, customer validation, financing and team building, customer acquisition, financing and team building, and then there are a bunch of electives: cloud computing and business solutions, Web 3.0 and e-commerce, outsourcing and consulting, mobile and social apps, healthcare IT, online education, gaming, and then we've added a bunch of new elective modules as well. Our methodology is lean, capital efficient, bootstrap startups. Even if you raise money, you still will have to bootstrap the early stages, as you heard Brian say today. A lot of VCs, Brian is just a representative sample of that. A lot of VCs are looking for that product market fit to be established before they're willing to give you a chunk of money. And the truth is, a lot of angels are looking for that as well, or seed funds are looking for that as well. So, which makes this bootstrap phase really critical, because to get to a financeable state, you're going to have to do a lot of work ahead of time. If you go to our press page, you'll find a lot of coverage of the premium members that we have generated. We also give you access to our social media channels: Twitter, Facebook, LinkedIn, everything, a blog, through which you can get your messages out there. We have an affiliate program, and we offer 10% affiliate commission to those who partner with us as anywhere in the world. In October, we have 4 more roundtables, and those are, at least to some degree, going to be focused on cloud businesses. And I'm going to need to change my handset. Hello, can you hear me? Hello? Okay, good. So Vision India 2020 is another book that you should be able to use to do ideation. 1M1M Incubator in a Box is our platform through which a lot of companies as well as other partners can bring incubation services to their constituencies. And we are very happy to work as a supplemental program to other incubators, other government organizations, corporate programs, and so forth. And we are doing that with a lot of major corporations right now. we basically work with intrapreneurship situations, we work with ecosystem development situations, all sorts of things. Carnival in the Cloud is the book we are launching today, so do check it out, and I hope you'll find that useful in understanding the market better and also learning from cloud entrepreneurs who have been able to achieve success by following certain strategies. And that's pretty much it in terms of today's presentation. If anybody wants to call in and ask any questions further, you're welcome to do that. You can also ask questions in public chat. And if nobody has any questions or comments, we will wrap up for today.
I have a question. This is Diman.
Yes, go ahead, Diman.
So you talked about your premium membership. Is there like a particular time frame and an application format that you do to do that, or is it?
It's completely flexible, 1 year annual membership, renewable. Many of our members are in the program for several years because we offer value at different stages. If there is a question of acquiring the first 5 customers, then there's a question of how do you go from 5 customers to 50 customers to 500 customers. There are different processes that you need to learn to do each of those stages. And as long as you're working within the framework, in fact, some of our companies have reached 3 million, 5 million in revenues, and still are using the program to address their challenges. But you can join anytime. You just go to the website, sign up, and you're in.
Got it. Thank you.
If you have any questions about the program, by the way, let me introduce you to Irina Patterson. Our phone number is 786-301-2456. Our email is irina@1mby1m.com. Skype ID is irina_Patterson. Irina will be happy to talk to you about anything that you may need to talk about the program itself. I see a question in public chat. Jainil is asking, would funds in the U.S. invest in India domiciled companies? Yes, some of them do. It depends, really. There are certain funds that have India operations. Many of the VC funds have India funds, so they normally would invest from their India parts of the operations. Some Indian angels who are based in the U.S. also invest in India. So it depends. It depends on your business. It depends on, many of these dynamics of what their expertise area is and so forth. And it also depends, Janil, on your market. So it depends on what market are you catering to. If you're primarily catering to an Indian market, the likelihood of investors based in India investing in you is much higher. If you're going after a global market or the U.S. market, then the U.S. investors tend to be more comfortable because they understand the market better and they're closer to the market. Anybody else? All right, folks, doesn't look like we have any further questions or comments, so we'll wrap up for today. Thank you for being here, and I hope you enjoyed the show. Bye-bye.